You're watching Countdown right here on Bloomberg Quint Live. The third day of the trading week, and yet again some gains piled on the index, comfortably above the 10,700 mark on the Nifty. The Bank Nifty this time, though, a slight bit of an underperformance compared to the benchmarks. But we'll talk about all of that and more in just a few moments, but quickly run you through the headlines. Markets are off the day's high but are holding on to the gains. The Nifty trades around 10,750. The IT index is the top sectoral gainer. What's not doing well is Yes Bank. The stock remains the top loser on the Nifty as corporate governance issues rise. REC and PFC are witnessing double-digit losses in trade today. Bloomberg News reports that the government is mulling a merger of both the entities. And 21% voter turnout has been recorded in Madhya Pradesh Assembly elections till 11 a.m., while Mizoram is at 29%. Well, good afternoon, Neeraj. Third straight day of gains coming in on the index, 0.5%, slow but steady, piling onto those gains ahead of expiry.
Yeah, and frankly, it's happening with not that the rest of the Asian pack is doing so or the US markets are doing so. So we have a bit of our own, in isolation, to be honest, that we're doing today. 10,737 for the Nifty 50, about 0.5% higher, so good going. Nifty Bank isn't doing quite that well today. The gains today are led by what's happening to Nifty IT. That's actually the key index which is revving up the gains in today's session, and all the heavyweights out there are doing well. And I'll get to that in a bit, but just bring up the mid-cap and the small-cap indices on the screen and show you what's happening there. The mid-caps and the small-caps the last couple of days haven't quite participated in today's session as well. You're seeing this. At 3 days on a trot, while we've gone well, the mid-cap and the small-cap indices and the market breadth has not quite remained as positive. So that is something that you got to keep at the back of your mind. And just before we get to our individual markets, just to show of what the world markets are up to as well. This is the market breadth, not looking that positive. And just let's see what Europe is up to in the session today before we get to what we're doing individually. A small tinge of green across the European indices, but the heat map should come up on your screen. You will see Yes Bank at the bottom of the screen out here, and then a clutch of IT names at the top end of the screen. So Yes Bank about 9% lower now. This is arguably one of the steepest fall that you've seen in Yes Bank in a really long time. OMCs have corrected a bit in the session today. Tata Motors down about a couple of percentage points. A lot of stocks which are believed to be bottoming out are seeing a bit of pressure in trade. What's doing well is IT. Maybe the return to defensives, or maybe oversold and therefore getting bought for 2 or 3 days on a trot. But Nifty IT, Infi, TCS, HCL Tech, etc. are doing well. Reliance Industries a couple of percentage points higher, and that's aiding the sentiment on the index per se. But it seems to be a very narrow move there now because a clutch of names are losing out. Yes Bank at 9%, and the mid caps and the small caps firmly in the red.
Well, that too, but the focus obviously remains in not just large cap IT like you highlighted, but mid cap IT stocks actually also contributing their fair share. So it's mainly focused more sectoral in terms of the moves that we're seeing today. So I'm going to start off with some of the top stock movers in trade today, and I'm going to start off with Emphasis. 7th of December, that's the buyback date. The stock now up about 5.5%, one of the top gainers within the mid cap IT space. Max Financial is the other one that's propped up about 3% followed by Arnam, which is up 5.25%. Other stocks which are making their moves in trade today, after seeing a slump in the last 2 or 3 trading sessions, you're seeing a recovery for a Jet Airways, which is doing fairly okay this time around. Persistent Systems, again a mid-tier IT name, gaining ground by closer to 7.5%, and L&T Tech also another 4% gained on that counter. Talking about some volume movers and the buzzers thereof, First Solutions yesterday was down, on Monday's session was down, so a quick recovery, some shots getting covered out there, 8.5% higher. Mindtree moves up as well, so that's again the IT flavor that's coming back into play. So Mindtree trades about 13 lakh shares, which is significantly higher than its last 20 days average, and a Bombay Dyeing, which trades about 35 lakh shares. The stock has moved up about 4.5%. So all in all, while the index itself is looking slightly more subdued this afternoon, it's individual pockets and individual stocks that are playing up in the session in this session. But what's happening in the more liquid universe? We're approaching expiry. Tomorrow is the November series futures and options expiry. However, rollover is shaped up. Agam Vakil is joining in for that. Agam, good afternoon.
Good afternoon, Devina. Well, we are seeing advances both for the benchmark indices along with the Nifty Banking Index, and we're seeing an accumulation of OI in the December futures, not as much for the Nifty November futures. So we're seeing traders remain hesitant to take any positions with respect to tomorrow's expiry. Coming down to the Nifty Banking futures too, again, well, substantial increase on OI, despite the fact that the Banking Nifty underlying is absolutely flat right now. The India Volatility Index has risen 3%, but it's not about the mark of 19, and that's a positive. That will remain a positive going forward. In terms of your open interest, again, as we approach expiry, you see more and more OI build around 10,600, and that's where we're likely to see some support come in. It is unlikely at this point in time, it seems, that we could see a breakdown below 10,500 as far as tomorrow's expiry is concerned. Moving on, when it comes to changes in OI, again, it is essentially the 10,700 put which has seen a considerable amount of addition towards open interest, and that again will suggest that the unlikeliness of the 10,600 put being broken, or rather 10,600 level being broken down for expiry tomorrow. Let's move on and take a look at stocks, and Yes Bank is one of the top losers on the indices. It's now at 165. It's down nearly 9% and considerable amount of shorts building into the system. TCS, on the other hand, leading the gains. Of course, Infosys is the top gainer on the index, but TCS is not too far behind. And this is where we're starting to see rollovers pick up and an increase, a considerable increase in open interest both for November and December futures towards longs. And the final stock on my radar is Z Entertainment. This one is also advancing with a very large amounts of positions being taken towards the longs in November and December futures. So we're expecting some more strength in Z Entertainment based on the kind of positions being taken here. Rollovers currently standing at 50%. So save for Yes Bank, it's been an all-round a good day of trade when it comes to some of those other key names today.
Okay, Agam, many thanks for putting that into perspective. So, well, that's happening, what's happening with the liquid universe, but I can tell you what's happening with one stock in the liquid universe, and that is Yes Bank. It's the top loser on the Nifty. The lender has been in the news for all the wrong reasons lately, and Moody's decision to lower its ratings on the lender's foreign currency and local currency borrowings only hurt the stock further. The rating agency cites corporate governance concerns and the impending change in management for the downgrade. The two promoter families aren't helping either, while the Rana Kapoor faction says that much progress has been made between him and co-promoter Madhu Kapoor. The other faction says negotiations are ongoing and one should wait for the final outcome. The bank has also informed the exchanges that its board is going to meet on December 13th to discuss the appointment of two independent directors and propose the name for the next chairman of the bank. All of this has resulted in spike in trading volumes as well for Yes Bank and a drop in stock prices. In fact, I was surprised, maybe not surprised really, but it's an astounding statistic that the volumes in this quarter thus far, October and November, the 2 months put together, are highest in the last 5 years, going back to last 5 years for any single quarter, and each quarter having 3 months. So in 2 months alone, I think the volume spike has been almost as high or higher than what any of the other quarters have done in the preceding 5 years. Now, one is the volumes bit and what's happening there. Two is what are brokerages saying about all of these recent developments. Now, naturally, a lot of negativity and not as much positivity that is coming in. Frankly, there are two things which stand out from Yes Bank's perspective. One is whether or not, how soon can they find a credible replacement to the CEO. So that is part one, and everybody knows that. And two, how much does one believe the quantum of the asset quality which the bank has, and if there are any write-downs that a new CEO brings in along with him. So I think, frankly, these are the two stumbling blocks and two monitorables from a Yes Bank perspective. What are brokerages saying? Well, two names and two brokerages that came out. UBS came out with a note as early as this morning or last night. They have maintained the target price at 150, which is a stark contrast to some of the others, but they're laughing all the way to the bank right now. They're saying that the higher NPL risk and higher corporate banking fee is not priced in, and any delay in capital raising may curtail the near-term loan growth for Yes Bank. Their bear case target price is, of course, about 110. But their new target price, or the price of 150, implies about 1.1 times FY20 price to adjusted book. Clearly, just a stone's throw away from that target price. Citi was a lot more sanguine on 15th of November when they came out with the numbers and the report. This was post numbers, of course, but they had mentioned that board changes could lead to near-term volatility, and they do see slower loan growth and lower net interest margins as being key risks for Yes Bank. But they, of course, also cited some key upside risk, which is selection of a credible CEO, earlier than expected capital raise, as well as higher loan growth if indeed the capital raise happens earlier than anticipated. So on the valuation front, I don't think you can fault Yes Bank at 1 times, 1.1 times FY20. You would argue in a normal case there's nothing to lose, but with all these uncertainties, you'll probably believe that there could be more pain, certainly showing today and yesterday.
In fact, when we spoke to TS in the morning, he also highlighted that, while the optically quarter-on-quarter performance also, while they've shown good numbers, how much of that is more of window dressing and how much of that is the actual performance that can be attributed to the bank itself.
Yeah, certain people would wonder.
So, yeah, and the ability of the bank to raise fresh capital comes under question, and that again bears down and bogs down investors from coming into the stock.
Yeah, but right now investors are doing only one thing, and that is fleeing the stock. Down about 9% in the session today, 9.5% as we speak. I'm sure today's afternoon will be all about how to approach the trade in Yes Bank, and if at all you can invest in Yes Bank or no. But yeah, these are multi-month lows for Yes Bank. Frankly, just pull up, just before we move on to the next piece, just pull up the 5-year chart if we can for Yes Bank. I would reckon, or 3-year chart or thereabouts, and I would reckon that this must be one of the lowest levels, say at least in over 2.5 years, that Yes Bank is trading at. So 165 and counting, and almost 100 million shares traded on Yes Bank.
Actually, it's more interesting because in the last 2 occasions, the stock has come to around levels of 180, 185, bounced back to about 200, 205. But this time the sweep seems to be slightly more stronger, backed by those heavy volumes that we're seeing. And 165, fairly uncharted right now. See whether or not, from a technical perspective, this leads to a further breakdown or not.
Yeah. Interesting times. Let's wait and watch what happens going ahead for a Yes Bank. The other one, which is also in news, is Arvind. Split into 3 different entities effective today. Yatin Mota is here to talk about what each of these entities presents for us. One of them, of course, relisted of sorts in today's session. Yatin, break it down for us. First, the demerger, and then what stands out? What does this entity which is trading today have, and what are people saying about it?
So Neeraj, essentially the scheme of arrangement becomes effective, from today in terms of the share split. So we have Arvind Limited, which is now split into 3 businesses. Number 1 is Arvind Limited, which is the current entity, and the price got discovered today. The share is trading at 110 rupees. That houses the textiles business and the denims business. Of course, we'll also see the listing of Arvind Fashions as well as Anup Engineering or Anveshan, the engineering arm of the Arvind Group somewhere in January if the approvals are through. So that is what the management has told us. The scheme of demerger was basically, if you held 135 shares of Arvind Limited, you were entitled to 5 shares of the engineering business and 27 shares of Arvind Fashions. More importantly, the residual 135 shares which you are left with is basically the textiles business. Now, if you look at the rationale, according to the management, we had a talk that the clear focus of the management would be unique for different business lines. So the management alignment would happen according to the business lines. More importantly, they need to follow different strategy for different businesses, since each of the businesses of Arvind Limited are unique businesses. So that was the rationale. As far as the current entity is concerned, when the price discovery happened, that is a pure play textile business, and brokerages are valuing that business at close to 6 times FY20 EV to EBITDA on an average basis, and that works out to be close to 110 rupees per share. In fact, we had brokerages like Edelweiss, Kotak and ICICI Direct, which expected the fair value of Arvind Limited to be 75 to 115 rupees per share, and that is, mind you, the target price and not the current fair value. So they expect the year-end target to be close to 115 rupees per share. That is what the share is right now. Arvind Fashions, again, the most interesting bit. They hold the brands business of the Arvind Group. More importantly, we have seen a disproportionate amount of growth in their retail franchise, and more importantly, the e-commerce sales. And brokerages do value that business at 18 to 22 times EV EBITDA basis. In fact, few brokerages like ICICI Direct have valued it at 2 times EV to sales. and if that multiple were applied, we could have the listing of Arvind Fashion to a level as high as 350 rupees. So the base case brokerage valuation for Arvind Fashions works out to be 250 rupees. So 250 to 350 is the kind of range brokerages are working with when it comes to Arvind Fashion's listings, which will happen somewhere in January, subject to approvals. And finally, the engineering business, which is Anveshan. Since it's a specialty business growing at 30%, better margins than the textiles business, 8 to 10% kind of a EV EBITDA multiple has been given based on FY20 multiples, and the valuation there also per share works out to be close to 20 rupees to 36 rupees per share. So broadly, if you were to believe the brokerages, a probable 10 to 15% kind of upside could be seen if you bought the shares of Arvind Limited yesterday. And now if you bought Arvind shares yesterday, you will be entitled to the shares of the engineering business as well as the brands business, which is Arvind Fashions.
Got that. Yatin, thanks very much for that. That is a quick take on the demerger and listing of the entities at Arvind Limited. Let's talk a little bit more about what's been happening in the real estate space, and one company to talk to is Brigade Enterprises. The real estate company aims to launch new projects for 12 million square feet going forward. It has also seen a rise in its debt levels in FY18, in fact tripled from FY14. Let's discuss the expansion plans for the company as well as the debt reduction plans with Atul Goyal, the CFO of the company. Mr. Goyal, thanks very much for taking up the time and joining in. My first question, obviously, with regards to the debt position on the books.
Thank you.
In FY14, closer to 1,000 odd crores. Come FY18, almost 3,300 crores plus in terms of debt. Do you have a suitable reduction plan in place, sir? Because obviously the increase in the debt on the books piles up in terms of overall increase in interest cost burdens as well for you.
See, if you see, our increase in debt is mainly in the expansion capital, because we are building 5 million offices, leased offices in Bangalore and Chennai, which we have partnered with GIC. So major debt has been raised there. If you see hotels, there is a minor debt, and even in residential there are 600-700 crores. So major debt is being taken there. A, B. Secondly, if you see our debt position, mainly it is securitized rental. Around 1,600 crores is securitized rental, where we don't have to. It's a automated where it gets fed by the rental which we earn from the properties. So if you see, net debt is around 1,000 crores only, which we have to service on day-to-day basis.
But sir, I mean, while your debt has increased, so has your inventory pile up. Is there a strategic plan in place? Are you seeing, the inventory coming off significantly anytime soon from 1,000 odd plus in FY14 is closer to about 2,200 odd crores in terms of your inventory positions and pile up?
Yeah, if you see our inventory, finished inventory is less than million. So it's not much of an inventory, and Bangalore market has been doing well now. If you see the latest figures, in March, the unsold inventory in Bangalore was around 1,17,000 units, which has reduced to 72,000 units now. So the market is going up, and we are quite confident that we'll be able to reduce our inventory substantially.
A recent report from ANROC suggested that this time's festive season sales took a slight bit of a dip pan-India, but there is a slight silver lining for NCR. But considering the focus on Bangalore for you and the southern parts of India, how has the festive season been, and is there any meaningful amount of sales that you're expecting in the coming quarter?
See, in Diwali and Dussehra is already a low season in South. because people are generally out and it's a major festive season. So generally sales in Bangalore, what we have experienced year to year, is low, unlike in north where the sales are high because of the Diwali and the Navratri. But in south it doesn't happen like that. But still we are hopeful that in this quarter we'll be able to maintain at least the run rate what we have been maintaining for first half, and we are hoping for the best.
Mr. Goyal, good afternoon. The general belief is that the organized players will get stronger, and there the price reductions are also not as swift as happening with the unorganized play. I mean, at least the belief in Bombay is that. How's the scene in Bangalore? Have you had to have these sales at lower ticket prices, or have you been able to maintain prices?
See, yeah, I agree, consolidation of real estate player will be there in future. But if you see market in Bangalore is about the realistic prices. That's why that market is growing. See, it has grown around 20% this year. See, in Bangalore, if you see the markets, the prices are not hyped like in Mumbai or NCR. It is still a realistic market, and we don't expect realization to go down in Bangalore market.
Yeah. So you were saying that you've been able to do the sales that you've done. I believe you clocked in what, 1.6 million square feet of bookings in FY18. I don't know what your first half number has been like, but has all of that happened at
1.23?
1.23 million.
1.23.
And that's happened at holding on to the prices that you've had at. You've not had to discount.
Yes. We are not discounting, we are holding on the prices. And see, I'm telling you, see any real estate player in Bangalore, the prices are all realistic. So, and generally it is not an investor's market, it is user's market. That's why the price are realistic, and that's why the real estate is doing now considerably well from last year.
Okay. The other factor would be because of this NBFC crunch, have there been some liquidity constraints for the space in Bangalore as well, and have your borrowing costs gone up materially?
See, our exposure to NBFC is very, very less than 10% of our portfolio is with NBFC, so it doesn't matter to us. We borrow construction finance mainly from the bank, so we have not faced any liquidity crunch, and market is as liquid as before. And right now, we are not having any problem.
What about borrowing costs, Mr. Goyal?
Yeah, borrowing cost has gone up, yes, after this liquidity crunch, yes. Borrowing cost has gone by 30-40 bips point, but then that is a part of the game. You cannot avoid the market conditions. So yes, borrowing cost has definitely gone up, but our average interest rate is still under control. We are at 9.33%, which is still pretty good.
All right, so just giving us a glimpse into in the coming year, can you talk about how much more are you going to launch in terms of square feet, particularly split it up into segments between residential, office, retail?
See, 9 million is what we have targeted to launch by this year and by middle of the next year. So I think that is what we will continue. There are a lot of affordable housing which is going to come in residential. In hotels, we have already 5 hotels which are operating, and 6th one is also will start by December at January, that is in Cochin. We have got two hotels more which are under construction and which will start operation in late around September to December 19. In case of leasing, our leasing is 95%. We are right now 2 million square feet is what we have leased spaces. This 5 million is going to get ready by before March 20, because these are all SEZ, and I think by March the first phase of Tech Garden in Bangalore will complete, and I think leasing will start. So I hope that by next year you will see a considerable leasing increase in our portfolio.
I had one small question. when this NBFC crunch was at its peak, and I'm not saying it's out of the window right now, but when it was at its peak, we've seen a clutch of NBFCs raise their lending rates at one go by 200, 300 basis points as well. And while you as a company may not have exposure to NBFCs, some of the borrowers might have had. Has there been any kind of noticeable feedback or slowdown as a result of borrowing costs for the buyers moving up, Mr. Goyal, the last couple of months?
No, I don't think so. See, ours is we operate in mid-income housing and the affordable housing. Our luxury housing is very less. So, in that scenario, banks have been doing very well. And in NBFC, the most active partner is SDFC, and they have not increased rate very predominantly so that it can affect the customer. So, I don't think so that that is there, at least in our case in Bangalore.
Okay. So I'm guessing the segments that you're operating in probably aid you with that. What are the targets? I know you briefly referred to them, but what are the targets for FY19? And would you reckon, Mr. Goyal, that with the propensity of the buyer to veer more towards the branded, recognized large players, and again, I use Mumbai and NCR as an example, not necessarily Bangalore, but with that propensity of the buyer, do you reckon that the quantum of sales and delivery for a company like you would only increase over the course of the next 3 or 4 years?
Yeah, definitely. I told you this consolidation of unorganized and organized real estate is going to happen. And in Bangalore also it will start happen in 2 years. And definitely we see an opportunity there, and this will increase the sales of organized player, no doubt on that.
Is any funds to execute more projects?
Yeah, we have. See, the residential, if there is a good sale in residential, then it generally a self-sustaining model in residential. So I don't think so funds issue is going to be there. In our case, once this 5 million is complete, our debt levels are going to go down drastically.
Okay, we'll leave it at that. Mr. Goyal, thank you so much for taking the time out and being with us and giving us that perspective. Really appreciate your time.
Thank you.
That's Brigade Enterprises. Edelweiss came out with a note. They said that the company is set for solid growth, and the numbers that they've spoken about are all in line with what the management just mentioned. They have done about 1.23 million square feet of bookings in the first half, and they're confident of clocking in 3 million square feet of bookings in FY19. Borrowing costs haven't gone up. Availability of credit is not a problem for Brigade, at least, and they believe that the mid-market segment is doing rather well for themselves. So, well, good going for that stock. The stock hasn't done quite well, but the business is seemingly doing okay for itself. What is not doing well, both the business and the stock prices, are PFC and REC. Now the government, remember, these are stocks in news because the government is considering the merger of the two state-run power lenders, REC and PFC. Sources tell Bloomberg News. This is a part of a plan to raise funds to bridge a budget gap. Rajesh Kumar Singh brings us the details in this report.
What we pick up from our sources is that the government is thinking about a two-part deal. The first would be where REC would acquire the government stake in PFC. Once that happens, then there would be a time lag, and after that, when REC becomes the parent, PFC becomes a subsidiary, REC would look at merging PFC with itself. The rationale for the merger is highlighted by REC in its representations to the Power Ministry. What REC says is that both these companies are operating in the same space, and they often undermine each other in the fundraising market as well as in getting customers. So what they have proposed is that if the two entities are merged, it would be a much stronger company, and they can harness the synergies in getting better loan rates and also instilling better discipline among customers, especially the power discoms. But yeah, this is what the position is as of now. It could change, we do not know.
All right, that's the news on REC and PFC. Both the counters in trade down closer to 10% in fact 10% down for PFC, REC also looking weak. Let's bring in Sameer Kalra of Target Investing. He's joining us on the show right now. Sameer, good afternoon. Right. And our first question has to be on Yes Bank, because you've been buying into the counter and you've been fairly optimistic on the counter since a while now that we've been talking. So what are you doing now? You said you were accumulating at 185 odd levels, stocks at 165 now.
So when we buy, we see a 40% downside from that price. So that's why I restricted to 180, 190. Because over there are bounces which are more technical. So I think issues are much more spread out to 6 to 9 months again, and I'm still limiting myself to 180, 190 with a certain weightage. So we have increased a bit. We might increase if it falls further from here till 130, 120. Let's see.
You see it going till then?
See, the dynamics, and when the situations go down, no one saw Infosys coming off that well. So I think even a Yes Bank, no one saw that much of downside. But I think you have to account it and you have to be prepared for it when you're doing these kind of trades.
From that point of view, December 13 meet should be very important, because there are talks of the name of the new chairman coming about, appointment of 2 independent directors. So in light of that, I mean, what is the expectation around this whole thing, and then the whole outlook cut that has been coming from Moody's, the rest of the entire brokerage community now getting even more bearish on the counter?
So see, personally, as a manager or advisor, I like these kind of situations when the whole market turns negative against one person and one company, and company is separate from that. There might be issues. There might be issues which might take 6 to 9 months to solve. The 13th December will be only sentimental positive. It won't change the whole trajectory of the share price of the business. It's more important for us to see the quarterly results. And maybe a name can change the diversion towards the downside. And I think that can only help out in the shorter term. That's not something which will block it out for a longer issues.
Can I talk some numbers, Sameer? At 165, it's arguably trading at about 1 times FY20 book. So the valuation is not the question out here anyway, right? Would you believe that these concerns... my question to you, question would be this way, that is it time to look for opportunity in a Yes Bank, or is it better to navigate through this period of uncertainty without trying to be a braveheart?
So see, it's always making wealth is in that braveheart situations. It doesn't matter on that. If you see the valuations, that justify everything. If you talk about the business, it's good enough business running. Nothing has happened. Operational issues haven't come in the Yes Bank performance or anything else. Now, what we do or what we advise people to do is start buying in smaller pieces.
Why? What's the rationale? Are you saying that the cleanup or a potential cleanup that could come about with the new CEO may not bring down? There's an uncertainty over the book value, right?
See, that's what I'm saying. So that uncertainty is still there. That's why I'm not saying it's something which you buy at 165 and expect a return in next couple of months. That's why I'm talking about more of having a smaller chunks. In that reason is that the upside when it turns and you're able to buy at a lower prices, because that upside no one knows when it comes and where it comes. It's about buying a good stock. See, you can put a doubt over everything. We've put a doubt on Axis, we've put a doubt on ICICI. It all comes through. If you take into a certain 1 year, 3 year graph, it all comes through. My only point is, are you able to buy it right now? I'm not a braveheart that I'll put all my money out here. I'll rather buy it in slower weightages.
Some amount of risk capital to Yes Bank. Okay.
You at least allot some part of it. See, if you think that it's something which will go bust, then, and it'll go into that valuation of 0.
You're saying there is no mortality risk?
Yeah. Certain times it becomes too big to fall. And there might be a takeover at a certain point. If you want to talk about that, that can be a possibility. Because see, today now there are a lot of companies which are in that situation. Do you want to be with them, or do you want to, see next 6 months, 9 months and wait for the downside to finish? I think
the point is at one-time price to book, the stock, wouldn't that have been factored in? I mean, it's just how much more are you ready to give up? I mean, do you see this coming off further? I mean, one-time price to book going below that, because if the market is not already priced in, a cleanup of the books and whether or not the numbers that show up in their quarterly performance is real versus window dressing. I mean, the stock has been punished already. Whether or not that's enough for return?
I don't think so that is enough, because what happens when the bears get a grip over a stock, and especially in these kind of murky situations, then they're able to push it down further than what you think is a right valuation. So that's where if you see it at 130, 140, I won't be surprised that there are certain places and there are certain days where you will see it. I would really like to buy at that point, but it's a matter of fact where you see and where you want to hedge yourself.
Okay. Well, that's an extended chat on Yes Bank. Difficult to quite give a sense of what will happen in the near term. By the way, just before we get to our experts, a clutch of other names which have corrected today. Infibeam is down 10.5. Let's just bring those intradays of these stocks one by one. Infibeam is down 10.5. We just discussed REC, PFC. Or rather, we spoke about REC, PFC. We'll discuss those stocks in just moments from now, but both of those stocks are down today. Repcom Finance is down 7%. Rain Industries is 138, by the way. And Diwan Housing and PNB Housing Finance, both of them have corrected strongly too. What is doing well is IT. The top 3 names on the Nifty 500 are IT names. So, First Source Solutions, Persistent Systems, Emphasis. That's essentially the story at the other side. It's IT which is doing well, Mindtree about 4.5% higher. Let's talk about all of this with both our technical experts as well. Rahul Mohindar of Viratech Software with us, as is Ruchit Jain of Angel Broking. Gentlemen, both of you, good afternoon. Thanks so much for joining in. And by the way, we'll talk about some long-term charts about crude as well a bit later on in the show. But let's just start off with the trade right now. Rahul, how are you approaching trade today? 3 days on a trot ahead of expiry. The index has shown strength. The broader markets haven't. What would your trading strategy be a day before expiry?
I would still maintain long positions, Neeraj. I still feel 10,900 to about 10,950. That's really the potential target for a short-term trader. Whether it will happen overnight is a hard one to call, but probably given a week, we should be higher up. So there's still a good 150 to 200 points on the upside that I see. There is strong index support at 10,600, 10,650. So I think we are really in safe turf. We should continue the upward trot. It's just that there's going to be a rotation of stocks. Like you were mentioning, there's suddenly the technology pack that's kind of waking up, and some of the banking names are dropping. So there's quite a balancing act going on. It's very stock specific, but my top picks, even within the index, is going to be something like a Reliance and an ITC. And when such heavyweights will give way, I definitely think we will see follow through. Okay.
Let's talk about individual stocks, Rahul, and what is one likely to see in terms of a trading position, whether on the long side or on the short side, and what are you recommending?
As I mentioned, one of the stocks I like is something like an ITC. So with a stop loss of 278, one could be looking at buying into ITC. If you're looking at very near term, we're looking at 292 as a potential target. If you're willing to hold this on further, we even think we'll move to about 305, 310. Of course, that's going to take a little longer in terms of time. We like Reliance Industries for targets of 1180 to 1185. So, buying at current levels too would be prudent, even though the stocks had a bit of a rally up. So I'd say keep a stop loss clearly below today's low of 1126 when going long.
Okay. Ruchit Jain, what's your call on the index? And now that we have expiry tomorrow, is there a trade on the bank Nifty that's possible?
Hi, very good afternoon. See, on the index front, we believe that more or less the expiry would be around the current levels only. primarily because if I look at the options data, then 10,700 put has seen a lot of open interest addition in last couple of trading sessions. So one can say that today, in spite of the broader market sell-off that we had seen in many of the mid-cap names, the index has managed to hold because of the index heavyweights, such as a few of the banking and the IT names, along with SDFC and Reliance. So I think 10,700 would act as a support for till tomorrow's trading session. And on the higher side, we have even earlier spoken about the importance of 10,800 resistance, not only in terms of derivatives open interest, but also technically the 200 DMA as well as the earlier gap area all lies in this 10,000, around 10,800. So 10,700 to 10,800, this range would continue for tomorrow's trading session as well. So I don't find any major strategy for the index from an expiry perspective, but certainly at current levels, keeping stop below 26,420, expecting target around 26,650 to 680 tomorrow.
Stock ideas, Ruchit?
Apollo Hospitals, I have recommended this earlier also, and I would repeat the same, that it is a buy for us even at current levels, because in this series we have seen a breakout on the monthly as well as the weekly chart supported by very high volume. So this outperformance is likely to continue in December series as well. At current levels, one can buy with stop below 1185, expecting short-term targets of 1330.
Okay, watch out for these names. Also watch out for, and we'll talk about the gainers too, but just since we're on the topic of the stocks that are moving a lot, kind of compelled to ask about PFC REC, that Bloomberg story, and on the website too, by the way, if you log on, you will read that whole story that is given by Bloomberg News on bloombergquint.com. The potential merger between the two names. Market is not taking it well.
So I think it's supposed to not take it well, because when the Ministry of Power says that's not a good idea, and the Finance Ministry says it's a good idea, then there are certain operational issues which are there and which in a sense promoter is raising. So if you see it together, they are expecting that once you merge, this 50,000 market cap will become a 1 lakh crore market cap in the next 2-3 years, and this will benefit into the numbers. But if you see the basic of it, PFC is more on the lending part, REC is more on the implementation part. So you're bringing two giants who's on your books and trying to make it into one financial firm, which I really didn't understand what's the whole purpose of doing that. Secondly, if you see the books, the debt is around 4,28,000. The Supreme Court order is still pending. I think that will go most likely with them, and that might provide a relief. But if you see on the operational side, if Power Ministry itself is raising concerns, I don't think so it's a better play to be together. I think it's rather sell off a certain stake, get out whatever they can out of that into the divestment target, and will be better off rather than merging the whole situation and creating an operational issue.
An interesting statement around that is consolidation should be market driven and not government driven. That we heard in the morning, and that makes a lot of sense, especially for this particular merger that we're talking about. Yeah,
just don't know in an election year what all can happen too. But clearly, the market is not right. And I think Samir is right in that context that market shouldn't take it well, and which is why the stocks have done what they have done. But coming on those, Rahul, Mohindar, PFC, REC, if it's possible for the charts to predict what could happen to these stocks in the near term.
I am in fact negative on these stocks. Despite whatever people are thinking at these levels, my sense is this is not a point to buy. This is in fact a point where this rally up that you saw on PFC from roughly 70 to about 110 almost. This is really a corrective rally. I don't see this as a breakout. And the reason I comment on it this way is when you look at some of the volumes that have got clocked in, that's what worries me. I mean, the kind of sell-off that you're seeing right now is looking like it's going to again retest levels of 81 to 82, and maybe that's where we'll finally get some support. So if you're a near-term trader, my advice would be not to hold on to these stocks. Probably the next 7 to 10% continues to be on the downside.
Okay, that's on PFC and REC. Ruchit, anything that you've made out of the recent moves within the FMCG basket? You had one swell day of gains for most of the names out there, post which they've gone cold. The likes of an HUL, Dabur, from the smaller names, Jyoti Labs, Godrej Consumer. I mean, one big bang move, and then post that, all of them have seen subdued trade. Anything that you would like to do here within this pocket?
So if I see the Nifty FMCG index probably last 3-4 months, then when the markets declined in the month of September and October, we had not seen any kind of resilient in FMCG index. In fact, FMCG index had also shown a sharp decline, and many of the FMCG, the sell-off in many of the FMCG names was supported by very good volumes. So I think this is just a pullback move that we had seen in this series along with the market momentum. Kolpal is one of the stock that has shown relative strength because of the outperformance in this pullback move in last 3-4 trading session. So if any decline comes, we can see this relative strength continuing in Colgate Palmolive. But apart from that, we don't think that FMCG as a pack, at least from a short-term perspective, would give very high returns or shows any significant returns. So I think one can tend to avoid stocks from this sector from a trading perspective.
Okay, that's the FMCG basket. And since we were on the topic, let's pull up IT most of the IT names, be the large cap names. That's the Nifty IT index for you. That's a good almost 3% bump up on the index itself, led primarily by the large heavyweights there. Infosys up 4.5%, and that's been a smooth sail upwards since the morning's trade. HCL Tech also 1,043 now, had gone to levels of about, I think, 950 odd from where it's picked up. On the mid-cap front, emphasis, 7th of December, I think, is when the buyback kicks in. You've got First Solutions 8% higher, NIIT Tech, KPIT Tech, all of them gaining ground. Samir, you want to comment on some of these names?
So I think Infosys and TCS have been our favorites and have been in the portfolio, but we reduced the weights 3-4 months back. And we saw that the rupee and everything was spiking up the valuations. Now also we see still a certain downside by the year end, but maybe from Jain or Feb we see the dollar index getting stronger, and over there we see again a movement coming in IT. So maybe over there we'll increase the weightages, but not right now. We would like to see the December quarter results before we take a call.
But there are a bunch of these mid-cap names which have bounced back. And Vineet Nair, that we were speaking to today, mentioned that he's seeing a fair bit of innovation in mid-cap IT as compared to large-cap IT. Do you have any names which is in your list of reckoning?
So Persistent is one.
It's fallen quite a bit.
Yeah, because of the certain issues regarding the IP revenue they had.
Yeah.
I think that is somewhere settling, or it'll come in the base in next 2 quarters. So the either or situation will come up, and it's on our books, but we are not looking it into such a hard situation. And other mid-cap ITs we stay away from.
Okay, there's a bit of a restart of a move in power names after a break for the last 5 days. Yeah. So Adani Power from 25 to 50, then a pullback to 47, 48, now again back to 53, half 54. Is decisive move there, and that's not just Adani Power. A couple of other names have moved too. I think they are waiting for this court ruling to come about. But that notwithstanding, if you had bought into these names, would you play the risk and wait for the court ruling to come about, or would you use this opportunity to get out of Adani Power and buy into more predictable businesses?
So I think if you were already invested or were trading into certain kind of a position in these sectors, you would get out at a certain jump. Because what happens, there are certain news jumps which they get. There are certain positive issues which they are able to sort out. Supreme Court might be just one of them. And the other point which comes in the issue of them is they have a lot of debt. That doesn't hand out over there. I think the debt issue stays on a longer sense. So I think it's more of a trade calls you can take, shorter term like 3 months, 6 months, kind of bounces over there, but not on the investment side of it.
Okay. Well, what else is moving around? Let's just see in the last few minutes of trade. By the way, ICICI Bank has shown a bit of an up move, I must say. The Sensex is up 0.8%. ICICI Bank has just showed a bit of a move in the last few minutes of trade, so that one is doing okay. There is GSK Consumer up about 4%. Should we read something into this? A deal brewing or otherwise? A sharp move, and it's just getting exaggerated. 4.5% now up for GSK Consumer, so that's doing okay for itself. And Shoppers Stop has some move to itself. It's gained another 1%, so now about 3% doing okay for itself in trade today as well. So 2 or 3 names doing quite well. One question from my end, Sabir, and that is on future retail. Yeah. Now, assuming that the PTI story is true and Amazon does buy, is that a win-win for future retail and Amazon both? Or essentially, for a future retail perspective, is it a win, or you don't think so?
I think it's more of a short-term win. That can be strategic helped in. So if you take the case of Shoppers Stop, they have 5% already in Shoppers Stop. So eventually everyone thought that this will be the main game changer for Shoppers Stop. But if you see operationally, it has. But the only point is, on that kind of issues, you cannot give a valuation to it. You cannot bump up the valuation just because Amazon has taken a stake. You might bump up that valuation. But I would like to see that play in the numbers before I take a call. And I think Shoppers Stop is much better because of the almost debt-free status, cash flow generation, still has a stake, and it's much more into and they are into consolidation formats. So I think over there I'll be better off than a future retail.
I saw Samir indicating to you when you spoke about GSK Consumer.
So over there, globally Unilever might buy it out, Horlicks from GSK. So over here Nestle is trying to buy it out. But I think if Unilever buys out globally, then they get overpowered by Nestle. That's what I was going to mention.
Doing well. I think that today Times of India is carrying some story about them being in the lead as well to buy out the Horlicks business. Nestle being in the lead to buy out the Horlicks business, if I'm not wrong. That's
But Unilever is trying to buy it globally.
On a global level.
So if they buy it on the global level, then Nestle comes out of
All right, that is an interesting take on some of those stocks there. But let's highlight some charts for you now. And Rahul Mohindar, who's here with us, has got some interesting observations with regards to what's been happening in crude oil prices, and some charts related to WTI crude versus the performance of the benchmark index, and also from a medium-term perspective, the movement of crude and how sharp the moves have been in Brent as well as WTI. Rahul, you want to run us through some of the charts and highlight that for us?
Absolutely. I think first off, what we need to kind of understand in the overall charts of crude, one is if we look at light crude on a weekly basis, and this is really NYMEX crude. If you look at all the major corrections we've seen over the last 2 decades, really there have been 2 styles of corrections. One has been the 2008 fall, which was about 75 to 77% in terms of a price drop. And then there was the 2014-15 fall, which also was close to 77% in terms of price erosion. So let's remember, these were the 2 major corrections we saw. Another 2 very serious corrections we saw were back in 2006 and 2011, which were about 35%. Now, if we look at crude at the present, we've already moved down about 35% from that top, from the recent top in the last 1 or 2 months. So we've had quite a sharp correction. We're right now on the weekly, the 200-day weekly average. So this is a really critical point where we're at. So, one has to take cognizance of the fact that we've had that 35% of a fall. We're kind of rotating from the 200 period weekly average. And if you look at the last 2 times this occurred, back in 2006, back in 2011, it lent some very good support. So instead of getting extremely bearish from here or trying to speculate new lows, I would say one should pause here, one should kind of wait out and see if the level of 50 holds on to light crude. I think if the level of 50 breaks down, then we definitely enter into something similar to the 2008 fall or the 2014-15 fall, where we extend ourselves to the levels of about 41. Now, if you look at major supports on light crude, we've got 41 as a very significant level. If you look at over 2 to 3 decades of data, it's been very evident that this level of 41 has lent itself as support and resistance, and very severe and serious support and resistance levels. So the next break below the 51 mark should be a straight slide closer to that 41 level. And but overall, the trend continues to be negative. All I'm trying to suggest is you may get that sudden bounce back of about 10-12% from current levels in the near term, simply because of the fact that we are, we've done that 35% drop. We're at that historical point of the 200 simple average coming in. And another 2 words on this. If you look at Brent crude, and I look at even a 3-hour chart or what we call a 180-minute chart, we've been looking at a lot of different statistical levels here. And if you look at the momentum pattern on this, the moment 61.50 gets crossed on Brent crude futures, we should again see a rally. So again, I may be a little early on this. We still haven't done that, but one has to keep one's radars and alarms on that if 61.50 starts breaking out, we may be in for a fairly significant pullback. And I'm still using the word pullback or a corrective rally because when you look at the long-term picture on crude, it's still very negative. So for short-term traders, you could get a meaningful bounce past 61.50 on Brent crude, and that must be taken cognizance too. Now, another 2 cents on how people are trying to correlate this with the Nifty. I personally think that if you look at the last 2 years or 3 years of data, whenever crude's gone up, the Nifty's actually gone up. I mean, much to people's surprise, we have to give cognizance to the fact that the last 2 months has been a drop on crude oil, but yet the market's kind of held out nice and firm. So we picked up from those lows of 10,000 and we've moved on. So there's no direct correlation in my opinion. Yes, they are interrelated, but in very small ways. You've got to factor in elements like the currency, you've got to factor in various other elements. But overall, I think we're really running on our own slots. We're not really super interrelated. I think we're kind of overreading into the situation. For that matter, if you start looking at even a chart of BPCL or HPCL, I'd give you the argument.
All right. I think we have lost the audio there of Rahul. We'll try and get him back. But pretty interesting there. As he talks about, the 3-hour moves on Brent crude, a crucial level to watch out for will be those levels of about 61.50 or that he highlighted. We've not yet broken those levels. 60.67 is where we are at on Brent crude. So interesting analysis there and mapping the move of the index with the price of oil. I think Rahul is back with us. All right, he's not yet back with us. We'll try and get that going. But nonetheless, since we're on the topic of crude oil, let's talk about some of the oil marketing companies and let's see how they're faring this afternoon. BP, HP, IOC. Today seems to be a day where some amount of profit taking has come into these counters. They've seen a swell run with the drop in crude oil prices. Today, some profits off the table. Ruchit, what would you do with an HP, BP and IOC?
So I've seen that in spite of this correction in the crude oil, now last 1 week, all the stocks have consolidated in a range. And HPCL, BPCL specifically, they have not, even IOC, they have not been able to cross their medium-term resistances. So I think one needs to wait for a breakout beyond the recent resistances. HPCL has resistance around 260, 262 kind of range. And if we get a breakout above that, then only we should expect some continuation of a positive momentum towards its next resistance of 288. So at current levels, I won't advise buying into HPCL or BPCL unless we get a breakout above the recent highs.
Okay, just before we let you go, Samir, since you're on the topic of oil and gas, Reliance Industries, yesterday a note came which spoke about how maybe it's time to give Reliance Industries the multiples of a B2C company as opposed to a B2B company. I don't know if that's the reason or the move back to defensives or a clutch of factors, but RIL has been on a bit of a roll the last couple of trading sessions. Yeah. From an investment perspective, is Reliance a good bet to take right now?
Not at these kind of valuations.
I mean, is it?
See, over there, I'll tell you what's happening is the cash flow generation, which was expected to come in FY 19-20, now will go to the fiber end. And until and unless they increase the ARPUs on the telecom side, the debt issue will overhang on the telecom. So around 1,000 or 950 or 900 levels, that makes it much more attractive than what right now it is. So I think over there another 15-20% downside if it comes, that makes it much more attractive to because we hold it at 800, 850. So maybe for us, it's kind of a bias.
You believe what? The valuation multiple will get derated a bit, or is it that
no?
Why would the stock move down to 1,000?
See, what will happen, it will start disappointing until as the ARPUs go up. It will start disappointing on the cash flow generation. All the valuations, all the brokerage houses, whatever I have read, is counting on the cash flow generation which they are about to come on FY20. Now when they have increased the Jamnagar capex, now when they announced it, that they'll expand it in next couple of years. So that cash flow calculation of all the brokerages houses will change. So I think in a couple of quarters you might see that happen, and kind of a reduction of the target prices might kick in.
All right. So just holding on to 1,000 then on Reliance. It's trading at about 11.50 right now. Target price of Bank of America Merrill Lynch somewhere closer to 14.30 on the counter. Thanks very much, Samir. Appreciate you taking out the time and joining us this afternoon. It's time now to take a very short break. Market's still holding on to gains of about 0.5% on the Nifty as well as the Sensex. Nifty Bank up closer to 0.2%. Take that break. We'll be right back in a few minutes.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
All right, 26 minutes left to go for market closing. Still holding on to those gains for the Nifty, 10,743. And remember, we've been talking about how the maximum call concentration lies at 10,800, tomorrow being expiry. It's interesting to see in the next series where does that upside or that resistance build up happens, whether or not we're able to take down that 10,800 mark. That's the snapshot of the indices. A quick look at what's been happening, on the global arena. The last time we took a check on Europe, it was trading pretty flat. Seemed to have perked up a bit, so about 0.25% higher for FTSE. CAC's up almost 0.5%, and DAX also gaining ground by 0.33%. Turnover, that's going to be an interesting watch. Yesterday's session was somewhere closer to 9 lakh odd crores on the futures and options side at this time. Similar number, but slightly more higher on the cash this afternoon. So 28,700 crores on the NSE cash. BSE cash not as much though, but total will pick up likely by the end of the session, half an hour away. But in the meantime, then let's talk about the Fab 4 stocks of the day and what has made it to Yash Upadhyay's list this afternoon. Yash, good afternoon.
Good afternoon, Devina. I'll start with Axis Cades Engineering, and that one is up about 6.5–7% in today's day of trade after the company said that its arm has won multiple orders to the tune of $20 million, so a big order win for the company, up about 5% at this time. Sudhiti Industries, it's up about 12%. It's a small cap company, has a market cap of less than 50 crore rupees. But a key development today, the company has received the product license from NBA Properties to manufacture and sell apparels and garments in India, with the contract spanning up to 31st of December 2023. Atul Auto was up about 3% It has come off from those intraday highs and is sitting at gains of about 1% after the company said that it has entered into an agreement with JBM Auto to form a joint venture to develop and expand the three-wheeler electric autos business in the country. And IT Pack is in focus as well. So Persistent System, that one's up about 7%. It's the fourth consecutive day of gains for the company, and it's up close to 11.5 or 12% in that period. Volumes too coming in significantly higher. Back to you.
Okay, great. Thanks a lot for that, Yash. All right, moving on then. The real estate sector, that's been under a lot of stress, be it on the account of lower sales or general stress in funding. It's also taken toll on ancillary sectors like NBFCs. But where has it left the Nifty Real Estate Index? Sharad Dubey standing by with the answer to that in our Chart of the Day segment. Sharad.
Yes, Devina, the real estate sector has actually been under a pressure, but we can see over here we have taken in our analysis the monthly best P ratio and the differences. So over the last 2 years, the Nifty Realty Index is actually trading at its almost lowest levels with a discount of almost 12% as compared to the Nifty 50 index. Apart from this, if we see over the years, in December last year, the premium was almost 95% to the Nifty main index. So basically, the Nifty Realty has fallen by almost 35% over this year on a year-to-date basis, while the stocks have been clobbered between 4 to 64%. That's the chart of the day.
All right, Sharad, thanks a lot for that. That's the chart of the day, and interesting analysis there on the real estate sector. Avinash Gorakshakar is also here with us. Avinash, good afternoon to you. Since we're on the topic of real estate, a lot of interest around it, talks of whether those stronger names in real estate are good investment plays from a 5-year horizon or no. But looking at the stresses now that's building up in the system, that may be questionable. What's your take?
No, I think real estate is going to be a selective space, Devina. I think you can't write off real estate entirely, but there are some companies which would definitely continue to grow. Of course, with the caveat that liquidity now for this sector is again come under pressure, and probably with the kind of NBFC issues, we could see a little bit of slowdown in the affordable housing segment. But overall, I think geographically there are many builders who are located in metros, especially Bombay. Some companies like Suntech Realty. I would believe that probably this is one company which could possibly be looked upon from a longer-term angle. Not only does the company have a very strong kind of very low leverage on the balance sheet, but I think in terms of the assets which they have on the balance sheet, especially the BKC and the Goregaon belt area, and now they are getting into affordable segments. So I think something interesting definitely looks here from a longer term horizon. And more importantly, I think clearly as long as their cash flows and liquidity are good, I think investors need to take a really long term call in this sector.
Okay. Take a long-term call on real estate, take a long-term call on IT. The short term is looking very rosy though. TCS is up 5%, Infosys 4.5%, HCL Tech about 2%. Pecking order, Avinash, Nifty 55 names. If you were to buy one of the IT names, which one would it be and why?
I think clearly Infosys, Neeraj, looks pretty attractive. I think the kind of battering the stock has received, and hopefully, the kind of, improvement they have done on the digital business, because digital now contributes almost 30 to 35% of their revenues. I would not be surprised that the third, maybe the fourth quarter could be a slightly stronger quarter. The third quarter for all IT companies are going to be a softer quarter. But overall, look, if you look at the price, I think TCS and probably Infosys, these are the names which possibly give a greater degree of comfort. The mid caps have actually underperformed for a significant time, and numbers on the quarter 2 numbers performance was also not all that great. So I would stick to Infosys and TCS, and I think clearly, from a longer term perspective, these stocks may not be growth stocks, but clearly they give a combination of growth and value over the longer term.
What else in particular are you looking out for?
In fact, Devina, we have been looking at capital good companies. In fact, we feel that the cycle has turned, and at least from the Q2 numbers, if you look at the numbers from Larsen & Toubro, ABB, or even a Cummins, I think these companies definitely have now shown a sign of good revival, and I think management commentaries have been pretty solid. So I would believe that, if one were to take a slightly longer term call, hopefully the third and the fourth quarter should be much better than the first half. So our sense is that all these companies have been actually companies which have been, frontline companies of the past, but probably because of some slowdown in the order book and probably, slowdown in the economy has hit them. But now I think things are changing, and probably, stocks like Cummins, which has been trading in a very nearby range, could be a good value pick if one takes the next, 12 to 18 odd months.
And in fact, we just have an entire piece on the recovery within the cap goods space and how the demand for heavy equipment by Indian companies is showing a sign of rebound driven by government spending on railways, roads and smart cities ahead of the next general elections. You can catch that whole story on the Bloomberg Wind website. All right, Ruchit, anything on an L&T, a Thermax, a BHEL, Cummins India?
I think among this space, Larsen has clearly shown outperformance in the last 1.5 months. Price, but the momentum readings are now in oversold zone. So if we should wait for some sort of decline to come in to get into fresh buying mode. 1370, 1360, this is the range where short-term supports are placed. I think these levels could be tested in next 2 or 3 trading sessions. So one can look to buy this stock on dips around 1360. The stop then should be below 1340, and the target again would be around the recent highs of 1440.
Okay. Watch out for those names. Watch out for Adani Power today. I just can't get over it. That stock has done really well for itself. It's now up 7.5% at 54.5. Mindtree surged very strong. It's now amongst the top 5 gainers, but I think in the last few minutes, it's last 15 minutes, it's actually piled on a lot of gains. So good going for Mindtree in the session today. As we've spoken about what's not doing well, Yes Bank is now sub the lowest level that it went on September 28th. I think September 28th or thereabouts, Yes Bank went to 165 and then bounced back from those levels. Now Yes Bank has succumbed to some more selling and is trading below those levels, 11.25%. Ruchit, for somebody who took a short position in the morning, tomorrow is expiry and the stock has already fallen 11%. Would you carry home the short positions, or would you take some money or take some profits off the table?
I think now if somebody is already holding short positions, then they should continue to hold. Prime reason, as you said, then the 28th September low of 165, which also acted as a support in the last week of October, wherein the low was around 167, 168, and again a bounce back was seen. So that both the lows have been breached, and if we look at the today's volume on this break of support, then the volumes are also quite good. So I think this should lead to some more sell-off in tomorrow's trading session, wherein the stock could head lower towards 147 or 146. So continue to hold on the short positions for target around 146, 47 for tomorrow's session.
All right. Almost a 2.5 year low on Yes Bank, 161 on the stock right now, down about 21 points. Time now to get in a check on what dealing rooms are recommending this afternoon. We've got Yatin as well as Darshan, both of them joining in right now with their channel checks. What have you boys been picking up, Yatin?
Well, if you look at the markets, clearly have been quite volatile. But as I was mentioning yesterday, IT stocks are the flavor of the season. Yesterday also we had a lot of buy flows on the dealing rooms as far as IT stocks are concerned, and they are doing well. However, what's not doing well is Eicher Motors, and dealers do indicate sell flows in select auto stocks, including that of Eicher, 3% down for that one. And remember, we have the auto numbers coming up next week, so Monday you will have the data trickling in. So ahead of that, Eicher Motors has corrected 3%, so not good going for that one. Apart from Eicher Motors, we have Shriram Transport, wherein dealers are recommending a buy today, sell tomorrow kind of a strategy. 2.5% up for that one on good volumes. And in general, the stock is on an uptrend after the recent correction. So, Shriram Transport is something that dealers are recommending as a buy. And finally, we have Adani Power. I suppose that stock is in the future and option ban. 7% up for that one. And dealers do indicate that there are domestic fund flows which are there on the positive side for Adani Power. So that stock continues to gain momentum. But Darshan has a few more stocks.
Yeah, so one of the outperformers of the pharma sector has been Divi's Lab. Off late, a little bit of sell flows have come in. Profit booking is seeking in. Two of the large foreign funds, they are actually trimming their holdings on Divi's Lab. But Divi's, no problem as such, but it's been a marked outperformer among the pharma space, so profit booking happening there. The other counter in which HNIs are actively selling the counter is Manappuram Finance. It has corrected all the way from over 100 to levels of 83, but nevertheless there are sell flows that are coming in on Manappuram Finance. And mid-cap IT as a pack is something that is seeing buying. You're seeing counters, like Mindtree, Emphasis, Persistent, all of them seeing buying. You've seen that, counters like TCS and Infosys have gained almost 8 to 10% in the last 2 or three trading sessions, but nevertheless this seems to be the pocket wherein money seems to be flowing.
Certainly looking like that, Darshan. Thanks a lot for putting that into perspective, and certainly looking like IT is the pocket in which there is some serious money is flowing in. Yes Bank is now at 160. I don't know. We'll probably have to keep on talking about it all through, but there's some serious movement out there. There's also there's some bit of a drop today in Bharti Airtel. Actually, bring that stock up. I don't know if the telecom data that just got released had to do with that. A bit of a pullback into Bharti Airtel. It was anyways down, but it's gone down a little bit in the last 10-15 minutes of trade. On the charts here, Ruchit, Bharti Airtel.
The last 5 to 6 trading sessions, the prices had shown a consolidation from 320 to 340. So that lower end of that consolidation, which was 320, has been breached. So for short term, this is a bit negative. Although overall, if I look at the weekly charts, then this seems that for next few weeks or maybe next 1 or 2 months, the prices would now consolidate in this range of 280 to 340. So if any existing longs are there from a trading perspective, then one can look to exit at current levels and re-look to enter if the stock comes near the lower end of the range of 280 or 290 range.
Telecom, Avinash?
No, I think clearly looking at the kind of subscriber kind of growth numbers and the market share growth of Reliance, I would believe that most of these companies have been under increasing pressure because market share gains have come for Reliance at the cost of these existing players. The only positive for Bharti in the near term is the kind of debt reduction they have been talking. So clearly, whatever numbers come out, I think it won't be any surprise, Neeraj, that to see that possibly one more time you could see Reliance Jio actually increasing its monthly market share. And I think clearly in terms of the ARPUs, clearly that is also one pain point which has been there for a long time. So clearly that could be the reason why we are seeing a little bit of soft activity in most of the other telecom players like Idea, Vodafone, or maybe a Bharti Tele. So overall, I think this space is going to be clearly competitive. At least for the next couple of quarters, I don't see any major improvement in the operating profitability of these companies.
Well, looking solid, some of these businesses. I just want to pull up Adani Transmission. I must say the Mumbai power bills have gone through the roof, but that notwithstanding, I don't know if Adani Transmission is really raking in some gains. In today's session is actually down 5%, 238 and counting. Adani Power, on the other hand, 17% over the last 3 or 4 sessions. So that's the other one to monitor in the session today. And in today's trade, some of the auto names have taken a bit of stick. Tata Motors and Eicher Motors, from amongst the larger ones, have certainly corrected quite strong in trade. What about the broader end of the spectrum? There is Infibeam, which is down 10%. PFC, REC have looked weak. Rain Industries, 8.5% lower. The numbers, Avinash, I don't know if you track this now, but the numbers were a bit abysmal. But then it was at about 175, 180. From there, it's taken a steep fall. Is the business model a bit of a bottleneck right now for Rain?
No, I think more than the business model, Neeraj, I think it's the global prices. And I think if global prices, for CPC come under pressure, then I think that could be a pain point for Rain in the near term. In the last quarterly number performance also, the management had clearly stated that prices would stabilize. But if the CPC prices further correct and if global prices don't hold to the current levels, then possibly there could be a kind of a derating for the stock, because clearly the company is vulnerable to the global prices, and obviously aluminum being the major sector, I would believe that it's better to be a little cautious here.
All right. That's Rain Industries in 6 months performance, stocks on about 43%. The other stock, that's had a fairly volatile run has been Sun Pharma Advanced Research, a smaller name there. Volumes about 2.5 lakh shares odd or so. But in the last 3 months, the stock has gone down about 31%. Ruchit, is there a further downside to anticipate for this one? I'm talking about Sun Pharma Advanced Research. That was Sun Pharma.
So in fact, not only last 3 months, if I look this entire calendar year, the stock has corrected and has shown an underperformance. At the start of this year, the stock was trading somewhere around 520. So the low top low bottom structure still continues, and the major supports on the monthly charts have also been breached. So in short term, I think the stock could head further lower. 242 is one of the support from a short term perspective to watch out for, and if 242 is breached, then we could see the stock heading further lower towards 220, 215 kind of levels as well. So clearly, one should avoid any kind of bottom fishing, despite of the recent fall that we have seen.
Okay, we've already highlighted how the housing finance companies are doing this afternoon. Situation doesn't seem to have improved at all. Repco Home Finance is still down about 7%, PNB Housing Finance 6.5%, Diwan Housing down 6%. Would you short these names, Ruchit? Repco, PNB, Diwan?
Repco, I would certainly short at current levels, because I think the stock would retest its earlier lows of 310. We have also seen the selling pressure getting built up in other housing finance companies. So Repco Home Finance at current levels, one can go short, keeping stop about today's high of 389 and expect target around 300 to 310 in next 1 or 2 weeks.
Okay. It's time now to take some closing strategies. Just about 9 odd minutes left to go for market closing. Ruchit, you want to run us through some buy today, sell tomorrow ideas, or sell today, buy tomorrow?
I think IT has clearly been bucking this trend today, and specifically some of the mid-cap IT names have shown a positive momentum after a long period of time. Mindtree is one of the stocks which has given a breakout from a consolidation phase. From a BTST perspective, I would recommend going long on Mindtree even at current levels, although it's up by 6.5%. But still, the 200-day moving average, which is around 930, that could be tested in tomorrow's session. So go long in Mindtree, keeping stop below 850 for target around 920 to 930 tomorrow.
Avinash, what about names? What is it that you have researched in the recent past which you believe is worth putting fresh money into?
In fact, Neeraj, we are liking 1 or 2 companies. One of them is, of course, Cummins from the capital goods space, and the second one is Sundaram Fasteners.
Cummins?
Yeah, okay. Cummins is from the capital goods space. Our sense is that possibly we could see a very good kind of jump in the order book in the next 6 to 8 months, and hopefully the diesel gen and the industrial business, have shown remarkable improvement in the margins as well as in the volumes. So our sense is that these prices look very good from a near-term perspective, at least the next 12 to 15 months. The management commentary has also been very solid. And within the auto component space, again, another company which has been giving, significant amount of free cash flows in the business is Sundaram Fasteners. It's a play on the entire four-wheeler, two-wheeler and the agri tractor segment. And, we happen to get some news flow from the management saying that even for the electric vehicles, the company has been doing a pretty good job on the drawing board. So our sense is that despite the fact that engine configurations would change, this company definitely has a great potential in terms of getting incremental business from new products. Most importantly, in terms of the dividend distribution, Neeraj, as well as the ROE and the free cash flow, this is one company which has never shown a negative free cash flow in the last 3 to 4 years. So it's available at probably, it's near to its 52-week lows. Our sense is that somebody who wants to actually get a reasonably good risk reward should actually use this opportunity, because the stock has the potential to bounce largely on the fact of both earnings as well as volume growth.
Okay, so Sundaram Fasteners throwing up good cash flows is one idea from Avinash Gorakshakar. The other one is Cummins India, and that stock too, well, on a lot more days has actually gotten good gains than others. The one which has fallen today by the wayside is Tata Motors. So that brief bit of recovery that a lot of people anticipated Avinash to come hasn't come. But frankly, would you go out and buy a Tata Motors when you have a Maruti at about 7,200, 7,300 or a Eicher at 24,000 odd? Is Tata Motors a good auto buy, or would you look at something else?
Well, I think clearly, Tata Motors would possibly see some pain at least for the next 2 to 3 quarters. I mean, it's very clear that the JLR business is yet struggling, and I think once the Brexit happens, Dheeraj, there could be some currency kind of damage since most of their currency is happening in the euro. I would believe that within the auto space, Maruti and Mahindra look pretty interesting. I think if one were to look at the next 12 to 15 months, Mahindra has been launching several vehicles both on the 4-wheeler side. They've also launched the 2-wheeler Java now. So I would believe that the next 12 months are going to be interesting for Mahindra. We could see a lot of volume growth kicking in from these new products. So Mahindra definitely deserves a very closer look, and obviously Maruti has fallen from a peak of 10,000 odd rupees. Again, in terms of the cash flow generation, in terms of the waiting period for the products, I won't be surprised that once the recovery happens, possibly after 1 or 2 quarters, you're going to see a bounce, significant bounce in both Maruti and Mahindra.
Okay. Some gainers then, like we've been talking about it, the cap goods space, and ABB and Thermax are doing relatively well in today's session. Both these counters have gained closer to 3.5% apiece, and ABB right from the word go has been on that upward trajectory. Thermax at 1,025. The volumes though are slightly more subdued on both these names, and Apollo Tyres also should pull that stock up on your screen. Fairly volatile moves in terms of the last few days pricing action, but today seems to have gained about 2.5%, volumes about 8.3 million shares, 236 on Apollo Tyres. Does it warrant a look, Ruchit? Apollo Tyres, 235?
I think last 2-3 weeks, whenever the stock had come near 220, 230, always we used to see a selling momentum again coming in. But today, the 230 resistance has been broken out. Secondly, even the volumes in today's trading session is quite good on this breakout. So this should lead to another up move of at least 7 to 8% in next few trading sessions. So at current levels, yes, if one is looking from a short-term perspective, then the outlook is positive for about 7 to 8% up move in next 1 or 2 weeks.
HEG and Avinash, while they have announced their buyback as well, the stock nonetheless, the pricing that they've given is almost approaching the earlier Bank of America Merrill Lynch price that they mentioned, closer to about 6,300 was their target price. Buybacks around 5,500. Do you see that much value that's there in the company?
No, I think Devina, clearly the buyback price is pretty attractive, around 5,500 rupees. But the amount of buyback is quite minuscule. I mean, it's just about 3% odd. And clearly, if you ask me, the kind of incremental upside for graphite electrodes companies, I think the near-term concerns are on the needle coke prices. I think the management also made it very clear that they are now going in for a 20,000 capacity increase. But margins possibly could come under pressure if availability of needle coke actually doesn't come through. So I think in the near term, at least for the next 1 or 2 quarters, pricing gains are already built in. What happens after that is definitely something one will have to monitor later on.
Okay, got that. We've got about 3 minutes left to go for market closing. TCS, Infosys, Z, some of the other bigger movers in trade, but the Nifty seems to be holding on to gains, Neeraj.
Yeah, well, holding on to gains, but off the highs of the day, Devina, as you summed up. And the Nifty Bank actually ending marginally in the red or very, very flat. It had been underperforming and it's looking like ending just about even Stevens. So off the highs of the day. The mid caps and the small caps were the worry though. And for the third day on a trot, we've had adverse market breadth. So while the headline numbers may show improvement, the broader markets are not showing that. That's the divergence, frankly, in the Indian markets the last 3 sessions. Anyways, Devin, I'll speak about what's happening to all the large the mid caps. Let me just quickly enumerate what's happening at the large cap end of the market. IT is standing out. Frankly, one reason why the indices are closing in the green. TCS, Infosys, HCL Tech in the green. Reliance Industries lending its helping hand, and it will be a tussle between Reliance and TCS as to which takes top spot. I believe Reliance would still be the top contributor, but TCS will be right up there. IndusInd Bank, Hero MotoCorp, HDFC Bank and HDFC. I'm guessing I have the next 2 names which are in the top contributors list in the session today, which is the HDFC Twins. What's not done well? Look at this one. Yes Bank at the top of the pile without any doubt. In terms of the top contributor and the top loser, OMCs have corrected, Goyal has corrected a little bit, and autos have had a slightly patchy day with Eicher Motors and Tata Motors, both of them looking slightly wobbly in trade. But if large caps had select pockets of underperformance, mid caps, it was a minefield of sorts, Devina, for a select set of names.
Well, you pick out some stocks related to news and the housing finance companies. They saw a real hefty beat in today's session, while the mid-cap IT names, following suit with what the larger IT names did, were okay placed in today's session. So we'll start off with the losers first. While we're talking about individual stocks, PFC REC on the Bloomberg News regarding the merger of these two entities. The stock of both these names, PFC as well as REC, has declined to 10%. And right from the word go, there's been no respite for these two. Repco Home Finance, Divan Housing Finance and PNB Housing Finance are some of the names that have witnessed heavy selling pressure in today's session. RBL Bank continues its downward slide as well. The stock being beaten down closer to about 4.5% this afternoon. Bank of India as well, another smaller bank there, looking weak. Indiabulls Real Estate is the other one that sees a downside momentum of close to about 4%. Amongst the gainers, and Adani Power rakes up gains closer to about 7.5%, and that's been in the second half of trade. First half didn't do much. Second half, you saw that big move coming in there. Mindtree, persistent emphasis. Three mid-cap IT names that are following the footsteps of the larger IT names today. From the cap goods space, you had an ABB and a Thermax, both of them piling up gains of about 3.5% to 4% apiece. Apollo Tyres doing well, and the other name, a mid-cap pharma name there, Torrent Pharma, closing the day with gains of about 2.5% to 3% apiece. That's the Nifty and the Sensex, not at the highest point of the day, but anything in the green is welcome.
Yep, anything in the green is welcome, but I dare say the market leaves a lot to be desired. I don't know how long this will last, this bout of outperformance of the large caps versus the mid caps, but the advanced decline ratio will come up on your screen, and you will see for the third day on a trot now, well, 2:1 in favor of the declines.
The turnover, that would likely be on the higher side. We did see a number of about 8.7 lakhs just half an hour before close, so that's picked up. On the NSE cash, that's come up to the average number that we've been seeing generally about 32,000 odd crores. So that's on the NSE cash. BSE cash, though, slightly more lackluster.
Yeah, it'll be interesting to see the FI participation as well. Typically, sectors which the FIs like have done reasonably okay today. HDFC, Twins, IT, etc. So maybe it could be a healthy number in today's session too. But the contributors and Reliance and TCS, I'm interested to see what is okay. TCS, by virtue of that higher gain, 5% versus Reliance is 2%, just about manages to pip it to the post. But HDFC Bank and Infosys featuring in that list too.
Yes Bank, 9 odd points lower. Not a heavyweight on the index, but just the quantum of the cut that came in, putting it into that top slot. L&T down about 9 odd points, ITC, SBI, some of the other bigger losers on the index, but nonetheless not managing to outpace the bulls on the Nifty at least. But quick closing comments then from both Avinash as well as Ruchit. Ruchit, let's come to you first.
So technically we are again around that resistance of 10,750 to 10,800 range, and the way the mid-cap index has shown resilient to cross over its cross over the recent resistance of last 1 month of consolidation. It seems that unless we cross this 10,800 the resistance, one should not be in a hurry to create fresh long positions on the index. From an expiry perspective, the 10,700 put as well as 10,800 call, both these options have seen significant significant addition of open interest. So I'm not expecting any big momentum in tomorrow's trading session. We should see range bound move on the index tomorrow, but fresh longs from next expiry or from a positional perspective should be done only once we cross this 10,800 resistance mark.
Okay, Ruchit. Avinash, quick thoughts here. Wait for December 11 to go by, or comfortable putting in fresh money?
I think, Neeraj, my sense is I think it's better to wait and watch. Hopefully, if BJP wins both the states, that would be a big positive surprise, because the markets have already discounted the fact that Rajasthan could be a lose out for the BJP. But in case both the states do come to BJP, then I think you could see a big bounce after December 11. So I think it's better to wait and watch, because the period before the elections, I think from 7th you would be getting some sort of election numbers out. I would believe that it's better to wait rather than jumping the gun. I think you could possibly get better opportunities post December level.
Okay, we'll leave it at that. Avinash, thanks very much for joining in. Ruchit, thank you too for sharing your thoughts with us here on the show this afternoon. Well, with that, we come to the end of the show. It's a wrap. Thanks a lot for watching. From Neeraj, myself, and the entire team that's put the show together.